Have you ever looked at a financial chart and just thought, what on earth am I even looking at? Just a bunch of confusing green and red bars? Well, today, we're going to pull back that curtain. We're going to learn to read these things, these candlestick patterns, not as random noise, but as a clear story. A story about the constant battle between buyers and sellers. And by the end of this, I promise, you'll know how to decode that story for yourself.
I mean, look at this. At first glance, yeah, it totally looks chaotic. But what if I told you that hidden inside all these patterns is a conversation, a real back and forth between the people buying and the people selling? Our job today is to learn the language so we can listen in.
So what even is a candlestick at its core? It's really simple. It's just a picture of a battle. Every single candle tells you the story of who was winning that fight, buyers or sellers, within a specific chunk of time. Could be a minute, an hour, a day, doesn't matter. It's a snapshot of market conflict.
Okay, before we get into any of the cool-looking patterns, we have to talk about the most important rule of all, and that rule is look left. All this means is we look back in time on the chart to find the key levels, the areas where the price had a big reaction in the past. These are our battlegrounds, and it's at these exact spots that candlestick patterns become incredibly powerful.
All right, let's jump into our first major pattern type, the rejection. And it is exactly what it sounds like. It's a crystal clear signal that the market tried to punch through one of those key levels we just talked about, and it just failed. It literally hit a wall. The classic sign of a rejection is this right here, the long wick candle. You see that long, skinny line sticking out? That's the wick. And here's a little pro tip for you. The longer that wick is, the more powerful the rejection was. It's a much stronger signal.
Now, what's so fascinating about this is the story it tells. That long wick is like a footprint. It shows that buyers, in this case, got this huge burst of energy. They tried to shove the price way, way up, but then, bam, sellers slammed the door shut, forcing the price all the way back down before that time period ended. It's a perfect picture of a failed attack.
So why do these rejections even happen? Well, it usually boils down to two things going on at once at these key levels. First, you've got traders who are already in a winning trade and they decide, you know what, this is a good time to cash out and take my profits. And at the same time, you have new sellers looking at that same historical high and thinking, this is a fantastic time to jump in and sell.
Now, a single rejection, that can be powerful, for sure. But what happens when the market tries to break through that wall not once, not twice, but 5 times in a row and gets rejected every single time?
This shows you the psychology perfectly. Let's get in their heads. From the seller side, you're thinking, okay, this might be a good place to take profit. The price just isn't breaking through. But from the buyer's perspective, you're seeing something else. You're thinking, wow, the sellers tried to push this down 5 times and failed. They're losing steam. Maybe it's time for us buyers to step in. This double action, as it's called, is what can trigger a really powerful reversal.
Okay, let's move to our next pattern and see how this all builds together. This next one is what we call the pause. These are the patterns that show the market is just getting tired. That strong momentum it had is starting to fade, and it's basically just taking a breath. The classic sign of a pause is the inside bar. An inside bar is super simple. It's a candle that's completely swallowed up by the one right before it. Its high is lower than the last one, and its low is higher. This is a huge sign of lost momentum because the market couldn't even make a new move up or down. It's just stuck. Another fantastic visual for a pause is the pattern of shrinking candles. I love this one because you can literally see the energy draining out of the market, right? It starts with a big, powerful candle. That's strong momentum. Then the next one is a little smaller. And the one after that is even smaller. It's a clear, step-by-step story of momentum just fading away into nothing. So, we've seen the rejection, the market hitting a wall. We've seen the pause, the market taking a breath. Now we need the final piece of the puzzle, the confirmation. This is the signal we can wait for that tells us, okay, the other side is actually stepping in with some real force now.
And that confirmation, it often comes in the form of a momentum candle. And with this one, the key is the body, the thick part of the candle. When you see a body that's way bigger than the ones before it, that is a power move. It signals a real, decisive gain in momentum, and it shows that one side has finally taken control.
So, here's the crucial point about how you use this. A momentum candle is most powerful when it shows up after you've already seen a rejection or a pause.
For traders who want a more secure, a more confident signal, you can wait for this candle as proof that, say, the sellers are truly taking over before you make a move.
And this brings us to the most important idea of all. We've learned the individual pieces, but the real magic, the real power, comes from combining them. It's all about stacking these patterns together to build a complete, high-quality story.
Think of it just like this. A single candlestick pattern, it's like one word. Yeah, it has some meaning, but it's kind of limited. But when you start stacking patterns together, you see a rejection, then you see a pause, then you see a confirmation. You're not looking at single words anymore. You are reading a full sentence that tells a very, very compelling story about where the market might be headed next.
And hey, look who's back. The number 5. But this time, it's not 5 rejections. It's 5 different candlestick patterns, all showing up at the same key level, all telling us the exact same story.
Let's just walk through this because it's a thing of beauty. This is from a real chart. First, as the price gets to that key level, we see the candles start shrinking. That's momentum loss, signal number 1. Second, we see those long wicks sticking out. That's a clear rejection, signal 2. Third, the candle color flips, another clue the momentum is shifting. Fourth, we get an inside bar, even more confirmation of a pause. And then finally, number 5, bam, we get that big bullish momentum candle. That's the confirmation. Do you see how every piece of evidence stacks on top of the last one to create one incredible trade story?
And that right there, that is the single most important takeaway from all of this. It's not about hunting for one single perfect pattern. It's about learning to see when multiple patterns all show up together at a really significant price level from the past. That combination is what lets you filter for only the highest quality opportunities.
So we've basically learned the alphabet and a few key words of the market's secret language. The charts aren't just random noise anymore, are they? They're full of these little stories about struggle and failure and triumph. So the only question left is, now that you know the language, what stories are you going to find?